The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. A pretty bearish day across the board on Tuesday in grains and in the livestock trade. A lot of outside market fears, energy market, crude oil down over 4% on the day. What do we make of Tuesday's trade action? Well, here to walk through things with us, we welcome in Matt Bennett of agmarket.net on the show today. Matt, thanks so much for joining us. And you and I were chatting before we jumped on the air. We should get a little spring planting out of the way. I know a lot of folks are just getting into the field or slowly starting, but not to toot your horn too much. You guys are done there in Illinois, Matt.
Yeah, in my part of the world, there's a few folks done. We actually were able to get done in April. You know, we had cool temps, but we had a couple of runs actually where it was kind of warm and we were able to get in the field and go. Got a lot done. Planted into like mid 60s for soil temperature. Of course, it turns around and you get some cold temps come in. We never got that big rain, which is fortunate. I think right after you plant corn, of course, you don't want that cold shock. But to be honest with you, emergence looks pretty good. But we're actually trending fairly dry at this point. And so we typically would not plant all of our corn and beans in the month of April. A lot of times we can't even get over some of our river bottom fields, but we're able to do so this year because we're dry. So now I don't want to talk about being dry because I know a lot of folks are actually dry, like significantly drier than what I could ever imagine. I'm just saying that relatively speaking, for the month of May, starting to May, we're very dry compared to normal. Last time that we were this dry in the spring would have been back in 2012. I know that the forecast looks different this year than what we had, of course, then, but you sure hope we get some rain here before too long and get things recharged because, it could go into a serious situation fairly quickly.
Very, very true. Well, and you mentioned a couple things there. Obviously, some folks are very, very dry. And, thinking about just the weather and the market correlation, a lot of similarities, differences as well, but plenty of similarities for both, thinking back to 2012, 2013 and these markets as of late and just the weather setup in spring planting. But, I think about this time of year, the calendar's in May now. Typically, this market, especially in grains, it's weather driven. We're thinking about the weather issues, whether we're planting, whether we're not, et cetera, et cetera. But really, first couple days of this month of May feels like we're not even thinking about that. It's all outside market related that's kind of weighing into this sell-off, Matt.
Yeah, in all honesty, it's pretty rough go. You saw some liquidation there at the end of the month last week. Actually, on Friday, though, we went down to 574 there, as far as July corn was concerned, bounced off of it, which was nice to see. Made a nice little recovery. Started out the week this week looking like things were going to be fairly stable. Overnight market had some buying come in. Things look great. And then you come in here today and, market went negative and then it bounced back, went negative, bounced back. But then going into the close, there's a fair amount of selling that came in. And so even front months were down, whereas you're looking at, oh gosh, July, let me make sure I'm doing this right. Almost, 11.75 cents off the high. That's a pretty big move off the high of the day. So it's fairly frustrating for sure. I think for most of us watching this, because we'd certainly like to see some support come in here. But whenever you see crude down over $4, it's pretty tough to sustain, some sort of a rally, especially with, these markets that obviously we're raising quite a bit of these for fuel. So, it's kind of a risk off day. You would think with grains down, that maybe livestock would be your one shining moment, but you don't want to go to that part of the screen either. So it's just kind of a risk off day. There's really not a whole lot of good things to say here, Jesse. So after we got done talking about my planning progress, I guess I might get bored of the conversation because it's not much. It's not much fun to talk about.
No, it's not much fun to talk about, Matt. It
No.
really is not. And, the sad thing is that we've been seeing this a lot. And I know we've been talking about getting risk management in place because obviously markets, they stair step up and they can elevator down. That's the old term I've always heard, or something similar to that effect. And that's really what we've seen the last couple of weeks here is this market just kind of start to fall out of bed. We've seen a few short rallies, but overall the trend is down. I think about specifically this corn market, and I think about, there's two sides of the coin. If someone's still holding some old crop, obviously got to think about some decisions there. But new crop wise, D's corn getting closer and closer to that $5 level, which I think is kind of a psychological level at this point in the market. If we were to break that, oh boy, I shudder to think what could happen in this corn market, Matt.
Yeah, I mean, I've had a lot of producers calling me over the last few days, wanting to come up with some sort of a strategy. Maybe they were a little bit lackadaisical in getting their plan in place, but regardless, they're in a situation now where I think it's got their attention a little bit more. You got to keep in mind, what is your insurance program? Whenever you buy 85% of 591, 85% of 591 is around 506, I believe. So, you're not too far to where your insurance is going to take hold at APH type levels. But still, to me, I've been telling folks on rally days, I certainly would want to step in here with a flexible plan once again and be in a situation where I can lock some sort of a floor in. Now, I don't know that I want to do it at 521 so bad. I mean, I don't know. Let's see. We closed the day almost 519. So, I mean, it's just rough, just rough to look at. I know people are frustrated, a little depressed about it. And I can sit here and say that historically 520 is a good price. But let's be real, the cost to put this crop out for the vast majority of producers was excessive, to say the least. Now, if you're a producer that was able to put inputs on this spring, maybe you waited on it, maybe you saw high fertilizer prices, decided to roll the dice, you were rewarded. I've talked to several producers, $850 for anhydrous prices, whereas a lot of us were $1,250 to $1,350 last fall. So you're talking $50 plus an acre, which that's a big deal. It really changes things. Let alone dry. Dry fertilizers come down as well. So there's a lot of different moving parts here. But for right now, it's early enough in the growing season that I don't know that I want to chase it this close to that 85% level of the spring insurance price, especially if that's what my insurance program is. So you got to know what your insurance program is, and then you've got to kind of know what it is you're trying to protect, what you're trying to protect.
Yeah, and you brought up a great point there. There's never a one size fits all approach when it comes to grain marketing, livestock marketing, et cetera, because to your point, I've heard the same thing. Some growers, they waited, they got their fertilizer needs as the price came down in the spring versus some who either bought last fall or maybe were forced, maybe their hand was forced to buy last fall. And so those balance sheets are all different. But at the end of the day, like you said, hearing from some producers who were maybe a little lackadaisical, just watching this market, maybe it's not a bad idea to at least get started in some way, Matt.
Yeah, and I think on rally days potentially. The other thing about someone who is kind of if I say lackadaisical, I don't want to be disrespectful, because I will say, a year like 2012, which I've already brought up, a lot of folks were lackadaisical in 2012, and thank God, because it is dry in a large part of the Corn Belt. Forecasts are that we're supposed to get some rain. I know we're switching over from La Nina to neutral, and so a lot of folks think we're going into El Nino. If that's the case, sometime this summer we could get into a little bit wetter pattern, but right now it just doesn't seem to be developing. So, if you are in a position where you haven't sold a whole lot yet, What I would encourage you to do is, again, you know what your situation is whenever it comes to insurance, your cost of production, et cetera, and then get yourself in a position where maybe you've got some offers in place on an up day. I think a lot of folks have been talking about getting back to the 550 to 570 level on these corn on a day like today when you close at sub 520. I know that seems far fetched, but this market can act very quickly anytime we get a new tidbit of information. I'm not bullish, don't get me wrong. I just don't want to get super aggressive at a level where I may not be able to etch out a whole lot of profit margin. So again, it's an early part of the growing season. We also have to remember this. If you do end up with a big crop, you're probably going to be looking at a carry type market once again, which is something we haven't experienced for a while. You may be able to make your bins pay some dividends. It's a long marketing year. If you can't get too much or enough sold previous to harvest, I wouldn't beat myself up too much over it. The last thing I'll say about it, though, Jesse, is that we do have to be cognizant of what our cash needs are for the fall and not get forced into making a decision during the fall because that's not a very good time to try to decide whether you're going to sell versus store, especially whenever basis levels typically at that time of year aren't exactly that fun to look at.
Well, we are joined today by Matt Bennett of agmarket.net. And Matt, this wheat market is very curious to me. We continue to see the crop rating, especially in Kansas, get worse. Funds keep beating up this wheat market, though. And I know the Northern Plains, spring wheat, we haven't even planted any spring wheat in Minnesota. We're barely in the ground in North Dakota, but yet we continue to push lower in this wheat market. I am very perplexed by the action. And I guess is it wheat just doing wheat things? Is there something I'm missing here, Matt?
Wheat is what to try to trade. It's just not much fun. I was just making a comment to a grower yesterday based upon the weather, in spring wheat country, that I struggle to think December would go much under $8, and we were just contemplating, what would making a sale and re-owning it or some sort of a strategy look like. And, I just felt like surely we'd hold fairly good. And then we talked again today and he said, hey, what about that $8 level? I said, I don't know. Let's readjust the conversation. And I'm surprised that you come in here and you just continue to bludgeon this wheat market. Now, with that being the case, again, I think that all of your ags are watching very closely, again, with what's going on in the energy market. Wheat isn't typically something that you tie to it, but at the same time, I'm looking around for reasons that we would be getting killed here. And I guess I'm kind of struggling to figure out exactly what it is, especially as you suggest whenever you look at the U.S. Now, the other thing I'll say about wheat, a lot of times I've said in my career, wheat can be grown anywhere in the world. So typically you can fix a wheat shortage. But let's face it, wheat is not as fashionable to grow as what it was in the past. And I think that, you're still looking at a position, not only domestically, but from a world standpoint where balance sheets continue to tighten. So, if you have a major crop failure, if you will, here in the U.S. again this year, whenever it comes to wheat, I think it's something that the trade's going to have to pay attention to at some point.
One note in the soy complex, too. I know the fats and oils report from NAS showed both bean oil and bean meal stocks down 7% from a year ago. I know we've had a few rally days here in beans, not so much on Tuesday, but I thought that was just an interesting tidbit to maybe watch to try and find a little support here underneath this soy complex, Matt.
Yeah, I applaud you for trying to find something positive to talk about here, Jesse. Because today's just kind of rough. But let's face it, your crush margins really have taken a beating over the last several weeks. Whenever you and I were in Nashville and we talked, I'm sure that I talked about crush margins, which were just outrageous. I talked about it all winter. When crush margins are like that, as a person who's originating beans for any sort of crush plant, what you want to do is to get your hands on every single bean you can get your hands on. I've got to think a lot of those ratios, a lot of those margins were locked in. For how long? Who knows? But I still think that in certain parts of the country, it's still going to be pretty hard to source beans. And so, yes, stocks are down. That's a bright spot here domestically for sure, is that renewable diesel industry is going to continue to grow. We know that the investment's there, the legislation's there. There's a lot of optimism and enthusiasm, and thank goodness, because that could be a saving grace because typically, as we know, it's really hard to get 3 years of extremely good commodity prices. And sometimes that third year into the fourth year is just rough. I mean, it's just a really rough go. This might kind of help alleviate that massive meltdown, if you will. I'm not saying that we're not going to have a couple of rough years. I've been talking about it, all year, that those are definite possibilities. But at the same time, renewable diesel, and on further down the line, sustainable aviation fuel, those things could be saving graces. I mean, I do think sustainable is going to, in essence, quote unquote, bolster, if not save, the ethanol industry. That is their preferred feedstock. And if we think renewable diesel is going to gobble up a lot, of gallons, if you will, of soybean oil, you stop and look at what sustainable would gobble up as far as gallons of ethanol, and it dwarfs renewable. So I do think we've got some good things coming on down the line, but I'm not saying that 23 and even 24 couldn't be fairly tough sailing for a lot of us after 2 years of just huge margins if you were able to grow a crop.
Great thoughts there in the grain trade. Let's go to livestock, cattle. Rough day on the board. I know we're picking up a little cash activity. I wonder here in this cattle market, again, probably nothing great to say. I just wonder, recent trade activity, are we getting a little top heavy maybe in this cattle market? What do you think, Matt? I know you've been bullish in this cattle market for quite some time.
Yeah, and I was just actually on another show talking last week, and I believe it was on Friday morning, and I was looking on Thursday. Corn had got hurt last week, and then what we saw over on the cattle market is we were up 30, 40, 50 cents. And I said, that doesn't look to me like a great sign. It looks to me like, there's some folks that are getting a little bit wary about buying cattle at a high price. And so I think for the time being, your assumptions could be correct in that, yeah, maybe we're a little bit top heavy for some people as far as this point in the calendar year. Now, hey, we're entering a very strong demand time frame, and I've got to think that you're not going to see demand go down, but pay attention as well to what's going on in the equities. I mean, equities just got smoked today. Whenever we were about to go on, I know the Dow was down over 400 points. And so typically when equities are really getting hurt, the cattle market pays very close attention to that, because ultimately, consumer confidence is something that's going to weigh heavily on what happens whenever it comes to cattle and beef consumption, if you will. So, I think that that's something you have to pay attention to, but still further down the line, fundamentally, this cattle market is going to be tough to bludgeon, like you've seen, in the commodities as well. I'm not saying that cattle are going to go just to the roof right away, but I do think it's going to be hard to hold the cattle market down, especially, Jesse, if you sit in here and this corn market continues to struggle, if not continue lower, the profit margins could be there. And I do think that you're going to see this cattle producer in pretty good shape, because I don't think fat prices are going to go down much. In fact, I still see, maybe some 180 trade later on in the year, maybe even a decent amount higher than that fourth quarter, first quarter next year.
Well, I'm going to find us one other maybe slightly positive note to end on. Hogs, we did have some green numbers on the screen Tuesday, so hooray for hogs, Matt.
Yeah.
And we have seen a bit of a rally in this hog market too as of late. It feels like maybe we've found a decent bottom and found some support here in hogs, Matt.
Yeah, you've got to think so. It doesn't look to me that, you'll go back down into the mid 80s again, like as far as June goes. For me, I don't think you're going to go down and test that here right away. But as you suggest, it's a little bit of a bright spot. It's not like we rallied much. I believe the highest any contract was up was a quarter, 25 cents, but we'll take it. I mean, it's better than all the red ink we printed everywhere else. So, I think whenever it comes to hogs, what you've got to watch closely is, what do our exports end up looking like? What's Chinese demand look like? Everyone has felt like their demand was going to back off and would continue to back off. But at the same time, I know a lot of times whenever we've heard that it's a precursor to the major purchasing program to try to buy cheap supplies. So whether it's corn, beans, bean meal, hogs, you name it, a person probably ought to keep that in the back of their mind, because, their population isn't exactly shrinking just yet. They still have 1.3, 1.4 billion people to feed, and they do like protein. So I do think that this hog market's probably going to be healthy enough, at least to hold its ground for the time being.
Well, Matt, we managed to kill time on a pretty rough day across the market trade. Always appreciate the insight. And I know folks, if they want to reach out to you guys for advice, agmarket.net's a great place to start. Any final thoughts for us, real quick, before we wrap it up today?
Yeah, just to add to what you said, I think it would have been almost easier for us to be sitting down at the bar drowning our sorrows today. But hopefully the next time we're on together, we've got better things to talk about. But we do have a big report next week, so
Yep.
I definitely, if you've got some risk management to do, be looking for opportunities in here. I just wish everyone a safe spring that haven't got all their planting done yet. I know there's a lot of you left, so take your time and don't get in too big a hurry.
And again, you can reach out to Matt and the folks at agmarket.net is the easiest way to reach them. Matt Bennett, thanks for the time today, and we'll talk to you again soon.
Absolutely, bud. Thank you.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.